Alright everyone, Cowboy Trades here and welcome back to the channel for an update on some new economic data. We just had the US job reports come in for the month of February and they came in hotter than expected, which is not looking good for inflation or the outlook for the next FOMC meeting. Let's talk about this. So in the month of February, the US economy added 311,000 jobs, which was much higher than the forecast 205,000 jobs. And even though we added 311,000 jobs, the unemployment rate actually went up from 3.4% to 3.6%. So we're seeing a lot of people getting laid off right now, and particularly with the non-pay farm roles going up, meaning that we've obviously added much more jobs than anticipated. This is not good against the fight against inflation. This is not good for the outlook of the next FOMC meeting, particularly because we're not seeing that softening in the labor markets that the Fed would like to see. So we're seeing more non-farm payrolls coming out. We're seeing the unemployment rate going up. And also another key aspect of this, which does not help with inflation, is the US hourly earnings year over year are starting to come back to the upside. Now, once again, not good for the labor market, not good for inflation. And if you remember, we quite recently discussed on the channel the things that Jerome Powell and other Fed members are looking at for the next FOMC meeting. They were waiting. They literally said, we haven't decided 25 basis points. We haven't decided 50 basis points for the next FOMC meeting. This is all data driven. We still have the jobs report and we still have CPI to come. The job reports came in hotter than expected, which is bad for the labor market, which is bad for inflation. And we have the final piece of the puzzle coming out over on February the 14th, which is on Tuesday next week. We have the US CPI year over year and month over month coming out. So this is the final thing that the Fed is going to be looking at before they make their decision on the next FOMC meeting on the 22nd of March, whether we're going to see that 25 basis point or 50 basis point increase. So far, part one, the jobs report came out in favor of a 50 basis point increase, and the CPI is yet to be seen. But because we're seeing more jobs getting added to the economy, because we're seeing average hourly earnings go up, these are all signs that the labor market is not softening and that inflation is going to be coming back in the next CPI report. I will keep you up to date on this, of course, when the numbers do come out over on Tuesday. Be sure to turn notifications on YouTube. Also, be sure to come and follow me over on Twitter at 618_Cowboy, because as soon as the CPI comes out, I will be posting it. I will be talking about how it will affect the market. And of course, as soon as that next FOMC comes right around the corner, I will keep you up to date on that. So for today, my friends, that is all I've got. If you do enjoy my content, especially if you do enjoy these updates on economic data and the stock market, when I do post them, of course, they're not as popular as the cryptocurrency videos, but nonetheless, still very, very important in how the markets will be moving and how the Fed will be looking at these markets for the next interest rate hike. So for today, that's all I've got. Make sure to leave a like and a comment, share the videos with your friends, follow me over on Twitter. That's all I've got for you today. It's been your boy Cowboy Trades. I'm out. Peace.